Good evening, everyone. This is Joe with Beyond the Chart, and this is a market update for Wednesday, October 23rd. The Dow Industrials are up 75 points today, starting to push higher again. You can see on the chart here, which is good news. And of course, the key thing that we need on the Dow Industrials is to get above this point here that I've got labeled B. I think we're in a sideways correction. There was an A, B, C correction. And this next leg up to prove itself needs to get above this high point. So that's what we're looking to get done. And hopefully tomorrow morning we got Caterpillar with their earnings announcement at 6:30 Central Time, and that could be the catalyst that helps launch this thing, get it back on track. IBM stocks kind of depressed, and of course there's a bunch of other stocks in there. But anyway, that's what we're looking for here. S&P 500 was up, what, 10 points today, actually, pushing up into all-time high, continuing in all-time high territory here. So it's, looking pretty good. And actually, I think this was an ABC correction here, too, because this point here, without going into a lot of Elliott wave move, was really the end of a major wave, major move up. And we've had a sideways correction. And now we've got this next leg going on. Trying to see if there's anything else I was going to say about that. I don't think so. The NASDAQ had a little bit of a pullback during the day today, and then came and rallied back in the afternoon. So it was up 9.5 points. Continue. What is that? 1, 2, 3, 4, 5 days in a row up. So that's had a pretty good push, pretty good leg here. We continue to see everything on track. I mean, we could continue to push higher along the top of the band, or we could get a little bit of a pullback. We'll just have to watch and see. It's really hard to tell. I don't think, and I think I talked about this, I think there's some resistance up above. Yes, there is. But it's several hundred points above in terms of some key resistance points. So we could get, and these lines are drawn back to these resistance points back 2001, I think, or 2000. So let's see. The New York Composite continues to push higher very nicely up above this point too. So this is why we need to get the Dow Industrials above this key point, because everything else is also getting there. Oh boy, my sinuses have really been bothering me today. I don't know what it is. We've had an absolutely gorgeous day here in the Dallas area, 72, 73, and it was nice and cool last night, so we're loving it right now. Let's see. Let's take a look at gold. Gold is really hard for me to tell what is going on. I mean, it's like I talked about before. It's kind of spastic, these big gaps, big jumps. I mean, gold was up, but well, GLD was up $2.35 today, but it's kind of in a sideways correction in a way, and it may be trying to get legs underneath itself to turn up, but it is really hard to tell. Now, oil, on the other hand, is pulled back exactly. Remember the last time I talked about this on the weekend? I talked about how we broke this trend line, and I said we've got the potential for this. Resistance here that was resistance is now going to be support. So it's going to be interesting to see if we get buying come in here, plus we're right near that 200-day moving average. So there's a very real possibility that buying could come in. If it doesn't, it'd be very negative. So we'll have to see how this plays out on oil. But we've had a pretty good pullback here on US. This is USO, which is the oil ETF. Now, one thing I haven't shown before, which is the TLT, which is the 20-plus year Treasury bond ETF. When bonds go up, when this goes up, this has got long-term Treasury bond holdings in it. So we're talking 20, 30-year bonds, okay? So this is the long-term interest rates for mortgages. When bonds go up, interest rates are going down. It's just the way the math works. So when you see that you've had like bonds dropping here through this period, well, what was going on? Well, back in May, the Federal Reserve started talking about the taper, and they started talking about how they're going to cut back on the funding and cutting back on the stimulus, the excessive bond buying that they were doing, pumping money into the economy. Well, so the anticipation was that interest rates would start going up. Bonds are dropping. Well, now we got into the September timeframe, and now all of a sudden the news was, well, maybe we're not going to taper right away like we thought we were going to do. So now bonds have been rallying and interest rates have been dropping some. So this kind of gives you a little bit of an indication of what's going on with the interest rate market. It doesn't help you necessarily in your day-to-day trading, but it does. It's just one more factor, to put in the pie when you're trying to get a feel for what's really going on with the economy and the stock market. Everything is interwoven. The chart of the day, Netflix. Okay, Netflix came out with these great earnings. It was up yesterday, closed at $333.50 on Monday. Friday. And then Monday, it was up like $21 a share. Almost $22 a share. Overnight, when they had the earnings come out, then the aftermarket trading, it was gapping up and traded as high. It was up around 390, 388. Well, that's where it opened today. So it opened at 387.84, traded as high as 389, and sold off for the rest of the day and closed, I think, maybe on its low, almost on its low. The low is 321.50, closed 322.52, down $32.46. And the volume, well, the volume was 25,504,000 shares. So huge. That's a little bit of a reversal. It'll be interesting to see whether that's the top, whether that's it. And of course, it sure didn't help when you had the CEO coming out and saying he's worried about the stock price getting ahead of itself and rallying too much. And it kind of reminded him of 2003 when Netflix was being talked about with NASDAQ all the time. I thought, I don't know, I'm not sure that's the thing to be worrying about. All right, let me take a look at a couple of things. Apache, I was in, I talked about it, I got out yesterday at the close, right at the close. This had this close below the previous 2 days lows, and I didn't like that, so I got out, and I had 34% profit on my option position. So I had more profit, but at least I had a profit, so I'm not going to complain about that. Expedia, ended up getting out of those today. Started moving up. I've been in these for 7 days. I have out of the money options. The clock's ticking. I decided that I'd give it enough time. I got in up here, 5107. I'm getting out. Got out when it was at 48.78, and I only got a 12% profit on those options. So decided to get out. And the last chart of the day was Yahoo. Got into those today near the opening. Got in, had a signal at the close yesterday, which I liked, and ended up getting in around $34.18 today, looking for this to make a move up. There is a gap. This gap in prices goes all the way back a couple of years, but there is a gap in prices here. I'm looking to see if it can push up and fill the gap and get up to like 39. So that's my interim target. We'll see if it can move in that direction. That is about it for today. Have a great Wednesday, and let's see, I'm trying to think if there's anything else. No, the jobs report came out today. That was disappointing. I guess that's really it. The jobless claims are out Thursday morning. I will talk to you guys again Thursday evening unless something spectacular happens between now and then. So have a great Wednesday, and this is Joe for Beyond the Chart. And stop by and visit, download the ebook. Thanks for stopping in.